Have you ever thought why you analyze the chart, analyze your chart using the 1 hour time frame and the trade goes against you? There is what we call multiple time frame analysis, and this is the solution. Now, what is multiple time frame analysis? This is simply buying and selling a cryptocurrency or a forex pair or a stock based on different time frames. Analysis cannot be done on a particular time frame, just one, but it can be done on a series of time frames. So that is what we call multiple time frame analysis. Now, what is the rationale behind multiple time frame analysis? The rationale behind multiple time frame analysis is to get the overall direction on the higher time frame and get the entry on the lower time frame. Whether you are trading stock, whether you are trading forex, whether you are trading cryptocurrency, whether you are trading indices, you need to do multiple time frame analysis. Now, each time frame indicates the candle, the time that each candle takes to be formed within that time frame. Take for example, this is a 1 day chart, and on this 1 day chart, then each candle here takes 1 day to be formed. Meaning after 1 day, the candle closes and another candle starts. So therefore, if you get a direction on the 1 day chart, if your analysis shows this candle is supposed to stay on the 1 day chart, then you sell, you make good profit within that day. So the higher time frame actually gives is like it fast forward the moves on the lower time frame. And that is why you need to do your analysis on the higher time frame before you get to the lower time frame. Now I use the 1 day, the 1 week, and even the 1 month chart to get my direction, and I use the 4 hour chart, and to a certain extent the 1 hour chart or the 15-minute chart to get my entry. The standard is the 4 hour chart. That's what we call noise. The standard chart is the 4 hour chart. If you get to the 15-minute chart, if you don't know what to do, then you may lose money. And that is what we do on multiple time frame analysis. Now let's get to the analysis and we try to get some pairs. So let's just get a pair. Take for example this pair. This is USD JPY. We'll get this pair USD card. Now if you get USD card, this is an analysis I did. I see how it works perfectly. I mean really perfect. This is the analysis. Let me just get to the 4 hours. You see perfect move up to this point, and this is the retest, then it's down. Now let me erase everything and we do the analysis again so that you can see. So when I get to the lower time, the higher time frame, the 1 week chart or the 1 day chart, what am I supposed to do? The first thing I do on the higher time frame is I draw my structures on the higher time frame. Now if the last candle is not on a structure on the higher time frame, then I forget about that move. As simple as that. And if I must get in, I get in and I get a scalp. I don't stay in the market for long. So this is how we draw it. You draw your structures. I always like to use this. So I draw my structure. This is a structure. Then here you can get a structure here, and you can get a structure here too. This is another structure here. Now these are the different structures, and I think there's a trend line here. Let me just get it. I always draw. If it is not okay, then fine. Good. This is a perfect trend line. I mean really perfect. These structures have been drawn on a 1 week chart. Now when the last candle is down at this point, then what are we expecting? This is actually what we are expecting. We are expecting this move to get down to this point, then it goes back up before it goes down. That is actually what we are expecting. Now on what we call retest, that's what we call single candle retest and multiple candle retest. At this point here, this is a single candle retest. This is a single candle retest at this point. So get here, this is a retest. You see one candle went up, rejection, and the candle in the next move starts. So if you don't understand what candlestick mathematics is, then you may have problems too. So you should understand. Now I don't trade candles, but we trade pattern. It's really important. So this is the analysis on the 1 day chart. Now if you draw these lines on the 1 day chart, and this is the best method I use, this is so far the easiest method. So I get the direction on the 1 day chart before I even get to the 4 hours chart. So on the 1 day chart, it showed a kind of clear direction down. So what are we expecting? This move might get down to this point. Since this is a structure, then it will get down to this point. And if it gets down to this point, it breaks to this point. The first thing you see here is market structure. There's a kind of exhaustion here. So if you are selling at this point, it is risky. This is the entry. This is the point that you were supposed to sell. But see, if you miss that opportunity, then it is risky to sell at this point because there is a structure here. So what are we expecting? Wait for the move. If it breaks to this point, then it breaks, it goes up, and we have a retest, then it sells down. That is what we can see on the 1 day chart, and that is how we do your analysis. Now if you get to the 1 week chart, on the 1 week chart will give additional confirmations to what we had on the 1 day chart. So on the 1 week chart, you see this is a move. We had a rejection and this candle is down. So based on the 1 week chart, this is what we are expecting. The last candle is not on a structure, but we may have a break. So we may have a breakdown to this point. And if you have a breakdown to this point, then this candle has to break, but it is risky because this candle is still forming. Remember, this candle takes 1 week. So if this candle takes 1 week, it is still forming. And if the candle is still forming, then we may have a kind of rejection and it goes back up. So to be on the safe side, they wait for this move at this point. So if this is what we have seen on the 1 week chart, it means it confirms what we had on the 1 day chart. So I get to the particular time frame, I get my direction before I even move to the lower time frame. Now on the 1 day chart and the 1 week chart, we expect a kind of move down. And if you are expecting a kind of move down, then what should we do when we get to the 4 hours chart? So on the 4 hours chart, we should look for buy opportunities only. And if you look for buy opportunities only on the 4 hours chart, I deleted this thing. If you look for buy opportunities only on the 4 hours chart, then if you see a sell opportunity, that may be a trap, or if you get in, you leave the market very fast. So if you get to the 4 hours chart now, what are we expecting? This is the move on the 4 hours chart. Now, see what is happening on the 4 hours chart. So I see two possibilities here on the 4 hours chart. That is why I say for you to trade this move, you need to wait for break. Wait for break before you trade. Now, if you wait for break, this is what you will see. So wait, if it breaks to this point, then wait, it goes back and retest. This is what we call the last kiss. If you retest at this point, then you sell and it goes down. So you sell at this point up to this level. But if it doesn't break, please do not get in. Because remember, the last candle is on a structure on the 1 day chart and even the 1 week chart. So do not get in. And now on the 4 hours chart, this is what I see on the 4 hours chart. This is a kind of W shape. So if the last candle gets down, then we may be expecting this kind of move. So this is a move that we should be expecting. If the last candle gets down, it goes down, then up, down again, then you have the next move up. So we should be expecting kind of double bottom. Now, if you are expecting kind of double bottom, then wait for this move at this point. And if this double bottom gets down to this point, then what do? We buy up to this level. As simple as that. Because the last candle is on a structure on the 1 day and the 1 week chart. And on the 1 day chart, it shows a kind of downward move. On the 1 week chart, it shows a kind of downward move. So if you get in there, you are trading this double bottom. And if you trade it, because there's a kind of confusion on the 1 day or the 1 week chart, and if you trade that kind of move, then if it gets to this point, there's a possibility of break. And if it breaks to this point, then you buy up again. If you are trading, you need to be smart. It's not about analysis, it's not about being good, but it's about being smart. So you need to be smart. When the move candle gets down to this point and it breaks, then you should understand what to do. If it breaks up, you should understand what to do. So that is actually how we do multiple time frame analysis. That is the first method. There are two methods that we can do it. But I think this is so far the best and the easiest method. That you get to the higher time frame, I get the exact entry or get a clear direction, and when you get to the lower time frame, you trade based on that direction. Do not trade against that direction. So if you get another pair, maybe GBP USD, this is the same thing on GBP USD, and on the 1 week chart you see the move. This is a kind of rejection and this candle is down and it's not on any structure. So if you are buying, what are you buying? So I see a kind of retest at this point. This is a kind of retest at this point. If you don't understand candlestick mathematics, you'll be caught in this trap, because if you get to the 1 day chart, you see long buy candles up to this point. But if you understand candlestick mathematics, then this is actually rejection. So since this is a rejection, then this is a retest at this level. And if this is a retest at this level, then on the lower time frame, what are we expecting? We're expecting kind of downward move. As simple as that. So this is a rejection, not only a rejection, but a retest. So this is a retest at this point, and after the retest, then what are we expecting? We are expecting a move down. Now there is no structure here, so there is no reason why this thing should reverse at this point. So this is the next structure very far down. And if this is the next structure very far down, then this move may get down to this point. So what should you watch out for? Watch out for the move at this level. So that is it. But there is a possibility of, today is Wednesday. We have 2 days to go. Wednesday, Thursday, and Friday. So we have about 3 days to go. Now this move may still get back up to this point. So we didn't have any confirmation. So this move will be perfect to take next week. Because when this candle closes, maybe as a sell candle gets down to this point, then it gives confirmation, and this will form what we call a bearish engulfing candle on the higher time frame. Then next week it gets up, it buys up a little before it sells. So there is no clear confirmation on this pair today, but next week we'll have a clear confirmation. If this candle ends like this, then we know we have to sell. But based on what I see, it is more of a sell. So if you get to the higher time frame or the lower time frame and you get a buy opportunity, if you're buying, then understand what you are doing, because it may just be a trap. So that is how you do multiple time frame analysis. That is the first method you do. The second method is by drawing lines. So that one is somehow complicated and to a certain extent confusing. Because what you do is you draw lines. And how do you draw the lines? You get to the higher time frame, you draw lines, support, resistance, trend line. You get to the lower time frame, you draw lines. So you have about 3 lines if you are working with 3 different time frames. If you are working with 5 different time frames, you have about 5 different lines with different colors. So what you do is you just get to the higher time frame, maybe the 1 day chart or the 1 week chart. You draw lines, maybe you draw a line using a color, maybe red. You get to the 4 hours chart, so you draw support, resistance, trend line on the 1 week chart, maybe with the red color or any color you choose. Then you get to the lower time frame, you get to the 1 day chart, you draw support, resistance, trend line with another color, maybe blue. You get to the 4 hours chart, you draw support, resistance, trend line with another color, maybe yellow. Then you get an entry. Now if you draw this, then you have multiple lines with multiple colors, and the lines may be confusing, so your chart will be really dirty, and that is why I prefer using this method. So this method is somehow good, very easy to understand than drawing lines. So it is not really best to draw lines. So that is how you do this thing. That is how you get multiple time frame analysis. Now if you just get in and use maybe a particular time frame, this is what you may experience. There's what we call market trap, and the market trap always occur, or candlestick manipulation, which always occurs on the lower time frame. That is why my standard is a 4 hours chart or the 1 day chart. I don't go below that. If I go below that, then I've gotten a clear entry on the lower time, on the higher time frame, or on the lower time frame, so I can get a clear entry, clear direction on the lower time frame, maybe 4 hours or the 1 day chart. Then I get to the 15-minute chart to get the exact point. There is a way we do that. That is taught in our master program. So that is actually how you do it. You get to the higher time frame, you get the direction, and you get to the lower time frame, you get the entry. Entry should be based on the direction you got on the higher time frame. Therefore, if you get a direction on the higher time frame, maybe a sell opportunity, I get on the lower time frame, I see a buy opportunity, then it's a call for concern. If you trade that kind of move, then you may be caught in that kind of trap too. So that is it. It's really important to do that. Now, I would just like to get to the lower time frame. Please let me switch my network. The network is not really the best. Let me just switch so that the chart opens. Connect. Not yet connecting. Okay, I think it's connected. I pray it works. So if I get to maybe the 15-minute chart, you just get there. This is 15 minutes. Still not working. So if you get on the 15-minute chart, you will see those kind of funny moves. I mean, really funny moves that you get an entry, but you buy or you say, I see the trade goes against you, I start saying they manipulate trades. It's difficult to manipulate the chart. I mean, really difficult. So if you get an entry, then that is an entry. The entry on the higher time frame cannot be manipulated. On the 4-hour chart, it cannot be manipulated. So if I get to the 15-minute chart or the 1-day chart, then I get an entry. I should know what I am looking for. So what I always do is I get to the lower time frame, get an entry when I've gotten a clear entry on the 4-hour chart. That is actually what we do. Get a clear entry on the 4-hour chart. If you get to the 15-minute chart, you get the exact point that the trade will not go against you maybe by 10 pips or even 5 pips. At times when the trade does not go against me by 5 pips. So that is it. I hope the network is back. So let me just load the chart. Okay, this is the chart. Now on the 15-minute time frame, this is actually what you may see on the 15-minute time frame. So you get a clear move on the 4 hours. They get to the 15-minute chart. Let me just get the USD card. Okay, this is USD card, and this USD card, if you get a clear direction, then you get to the 15-minute time frame, you will see a clear entry. I will get a clear entry, then you get in and it goes. But if you get on the 15-minute chart, you may have what we call noise. So if you see the trade in the opposite direction, you just get in and start buying. And this is a good example. I mean, really good example. Now see what happens here. At this point, this candle went down, and most often this thing occurs during the dormant period, the closure of the London session. So between maybe 8 and 5, the market is open. After 8, you have this kind of dormancy, and the dormancy occurs till about 6 and 8. Then you have a move, and based on jigsaw pattern, this is what we call the accumulation phase. They have the expansion phase and the trending phase down. So this is a bullish engulfing candle, indicates a buy. Now when you get in at this point, the move goes up to this level. After that, boom, it goes down, and you will lose that trade if you hold the trade for long, because this is an expansion phase, but you trade the trending phase, and the trending phase ends here. So this will be a pullback if you get to the lower time frame. So that is, if you get to, this will be a pullback if you switch to, or if you squeeze a chart. This is a pullback. I see it's a clear retest. I mean, really clear. So you wait for the move at this point and it goes down. So this is actually what we call a trap. And that is why it is, I don't like getting to the lower time frame. If I get to the lower time frame, it means I've already gotten this entry, and this is what I do. You get this entry, and you know this is a retest point. Now if you wait for this retest point, you get in maybe at this level. Let me just try to mark. Okay, you say, okay, this is a level. Now if you get to the 15-minute chart, this is what you will see. On the 15-minute chart, you will see this move. It goes up, then have a buy candle here. After that, they have a very long sell candle, and this is a bearish engulfing candle. And after that, you get in at this point. If you get in at this point, then this is a target. Now, if you get in at this point, it moves down to this level before you get a trigger on the 4-hour chart. Remember, 4 hours, there are 8 candles. No, there are 16 candles on the 4-hour chart. Now, since there are 16 candles, they count 16 candles from this point. It forms the 4 hours candle. Now, so you have the entry maybe at this point, and you have the entry at this point. You wait, this is a retest before it goes down. So if you are on the 4-hour chart, this is the point that you get in down. But if you switch to the 15-minute chart, then you get in at this point, or maybe at this point, and it gets down. So that is actually what you do, and that is what we do based on multiple time frame analysis. So to me, that is a gold standard, and you can implement that to trade. So that is it. See you guys again, and please don't forget to subscribe, you share, and you like the video. Subscribe so that when we release any other video, you'll be the first person to see, and you like and also share. It helps us to grow, and it helps the community too. So that is it. Wish you the best, and see you guys. Bye bye. Trade with caution and be smart when trading.